What's up, TikTok? What's happening? YouTube, what's happening? Welcome to the Ironworth Trading course. The Ironworth Trading class, you know what I'm saying? This is the Ironworth Trading University, right? Online university for financial literacy, stock market information. We trade in stock options and we also trade futures. So this is your hub to learn. I'm the online mentor. All right, so I just wanted to make sure I come on here tonight and talk about a few things. So if you are new here, come on in, hit the follow button, hit the notification bell so you don't miss another live. We're going to go over a few things tonight. I'm going to talk about earnings. I'm going to go over S&P 500 chart. We're going to talk about SPY. I'm going to teach you guys how to read a chart tonight. And I also got a couple of my plays that I'm going to let y'all copy for the rest of this week. I'm going to go ahead and send the live out to a few people for a minute before I actually get started. I just want to pump my live out. So if y'all could do me a favor and share the live, that will help me out a shit ton. Shout it a shit ton. All right, let me move. Let me promote this out real quick. Let me see. How do I pump the live out real quick? Hold on. How do I share this shit out? There we go. I'm about to get started in a second, y'all. I just want to push the live out to a few people. Let me pump the live out. Pump the live out. How y'all doing tonight? Did y'all have a great weekend? This is my birthday weekend. Did y'all enjoy y'all weekend? Let me know in the comment section if you had a great weekend. All right, I think that's enough. I ain't gonna bother everybody. If they don't join, they don't join. They always be like, hey, I never know when you go live. I missed your live. I didn't see it. Blah, 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 blah. So I just want to make sure I send it out to everybody tonight. Just give me a second. All right. That's enough for now. All right. That's enough for now. Live right now, just, you know what I'm saying? I'm going to hit you up as soon as I leave there. But you can pull up on the live if you want.
Which one you want?
Ironworth Trading.
TikTok?
Yeah. That's all I go. I don't go live nowhere else.
I'm about to watch.
All right. He know damn well I'm live, y'all. And he gonna call my phone. I'm finna put it on Do Not Disturb. Do Not Disturb. All right. All right. So this the big news that everybody freaking out about right now tonight in the stock market. So the total value of all stocks in the United States is worth 245% of the entire United States economy. I don't think y'all understand what the fuck that means. I'm gonna say it again slower. The stocks equal 2.5 times the size of everything America make in a whole year. Imagine your paycheck is like $100 and I don't know, I'm gonna use a goddamn baseball card analogy or something. Now let's say you collecting fucking Pokemon cards or something, right? Imagine you got a Pokemon card collection that's worth $245, right? Now your paycheck $100, but you got a card collection worth $245. Now it's a little crazy. Like this number has a fancy name that we talking about. It's called the Buffett indicator. I say Buffett, but his name is Warren Buffett, but I call him Buffett. But yeah, Warren Buffett. This is the Buffett indicator, right? It's named after Warren Buffett. He like the grandpa of investing. Investors treat this motherfucker like he Jesus Christ. What he say, when Warren Buffett say something, they usually listen. He made a lot of his money after he was like 60 some years old. He rich as fuck. But now he once said that if stocks get way bigger than the economy, we need to pay attention to a bubble. It's a bubble alert. Like back in 2001, right before the dot-com crash, this number that I'm talking about right now hit 150%. And what happened after that? What happened to the market? It was down 50% in 2 years. So now we at 245%. That's higher than ever, even higher than 1929, right before the Great Depression. What does this mean? Why do we give a fuck about this? Does this mean that the market about to crash tomorrow? No, I'm not saying that. This shit could definitely keep going up. But it could correct. Don't nobody know what the fuck going on, right? But this what I want you to know as a beginner, that right now the market is expensive. It's expensive. All you new traders and you new investors, right now it's expensive. So what do I mean by that? It's like buying a $20 burger at a food truck. It tastes good, but is the shit worth it? When shit get hyped up like this, smart people get nervous, all right? Not panic nervous, just maybe I'm going to keep some money on the side, type of nervous. Like maybe I should just keep some cash ready type of nervous, right? So you don't got to do anything crazy, but I'm just giving you a reminder. I'm here to, remind you of this, right? Don't put your fucking rent money into meme stocks because it's going up. And when they call it a meme stock, they calling it that because of the volatility of it. But I don't want you to drop the money, the hard-earned money that you need into this shit, right? This is not financial advice. This is common fucking sense. This is for educational purposes only. So you just want to make sure that you don't get wrecked like beginners get wrecked because they put their money in some shit because it's going up. What you should do instead is, one, keep on learning. That's why you're here right now. Hit the follow button, hit the notification bell. That's step one. Number two, you should only be investing money that you can afford to lose. They like, what, nigga, afford to lose? What the hell is you talking about? I can't afford to lose shit, right? I get that, but I'm just letting you know you should not be investing money that you can't afford to lose. And then number three, I want you to zoom the fuck out. Stop watching TV with your nose on the TV screen. Scoot the fuck back from the TV like your mama told you. See the bigger picture when you zoomed all the way in. When in doubt, zoom the fuck out. The market goes up and down always. That's it. We're not gonna make this shit more complicated than what it gotta be. This ain't no doom and gloom. This ain't no to the moon hopium and shit. We're gonna keep it 1,000. So drop 245 in the chat. Put 245 in the chat if you understand what I'm saying. Let me know in the comments. Are you excited? Are you a little scared? I just wanted to make sure. But tonight we're gonna go over a few things that I see in the market that everybody should pay attention to this week. We got a big earnings week up ahead. Right? A big earnings week up ahead. And the video, the fucking AI monster. But even that 245%, that's a problem. Yeah, that's a problem. But yeah, we're gonna talk about earnings reports though. We're gonna go over earnings. Let me see what we got. What's first this week? So it's a lot of earnings coming out this week. I don't know if y'all put a W in the chat if you would like to learn why earning reports are important and how to trade earnings. If you would like to know how to trade earnings, put a W in the chat. I want you locked in because today we're going to break down some powerful shit. Misunderstood opportunities in the entire stock market. Y'all don't be paying attention to the trading earning reports. Y'all got to focus around this time because this one you can make a lot of money from all the movement that's about to happen in the market this week. Every single one of these symbols you see shows you a company that is about to bring out their earnings this week, so you get to know how good or how bad they're doing. Okay? Most people either ignore this shit or they gamble it. They gamble on the information. But after this live, you're going to understand exactly what earnings are, how to read the shit. Whether you never looked at a company's financials before or not, you know what I'm saying, or whether you've traded earnings without knowing what the fuck you was doing, this right here is where it's all finna make sense. All right, so an earnings report is basically a company's financial report card. You hear me? Y'all remember y'all used to get them report cards, and if that shit wasn't good, what would you do with it? You would hide that shit, right? If it was good, you ready to show everybody. You whipping that report card out to show everybody. Well, an earnings report is basically a company's financial report card. It's how they tell the world every 3 months. This is how they gonna tell the world how much money they done made, how much money they spent, what they plans gonna be moving forward. So if you invested in a fucking company, this the type of shit you want to know. You want to know, what am I putting my money in? Are they doing good? Are they doing bad? Every public company, that means companies that trade on the stock market, they gotta file these reports with the SEC. The SEC is the Securities and Exchange Commission. It's like the police for the stock market. That's the government agency that's gonna regulate the whole market. I know we don't give a fuck, but I'm just letting you know. These reports tell us as investors whether that company's sales are growing or shrinking. Is the company fucking profitable? Are they beating expectations, or are they disappointing us? You know what I'm saying? These are a few questions that cause these stocks to go up or down after the earnings come out. Sometimes 10%, 20%, hell, even 50% in one day. You know what I'm saying? So you will hear people say the phrase earnings season, but you will now, after tonight, you're going to know what this means. That's the time of the year when the majority of the companies release their quarterly earnings. It happens 4 times a year now. 4 times a year. And traders, we usually get excited because we know this is where the volatility comes in. A lot of shit be trading sideways and you don't even realize it because it's still going up and down inside of consolidation. But when earnings season come around, we get to see some action. We got action. Right? We got action. So now you'll pretty much want to pay attention to volatility. What is volatility? Volatility, VOLATILITY, volatility. It means price movement. Okay? Say it with me. Price movement. The things that traders need to make money. We need this shit to move for us to make money. So whenever you got a lot of volatility, that's a good thing. I want you to think of volatility like gas in your car. Without this, your car not gonna fucking move. Without volatility, your trades are not going to fucking move. Earnings season is gonna give you that gas. It's gonna get the market that gas, or that stock that gas, that huge price movement. And that's what's going to create the opportunity for you as a day trader, or as a swing trader, or even as an investor. Like, you might not be trading options. You might just be investing. So I want you to listen closely because this part is key. I want you to know that the market don't just react to what the company reports. We don't really give a fuck about what they report. Sometimes they can have a good earnings report, and that doesn't necessarily mean that the stock is about to go up. So don't fall for that shit. Don't think you could just, listen to a company's earnings report and they say they doing good, and you like, well, they did good, and how come the stock went down? We learned that too many times from the video. Like, they reported very good earnings. They made $1 billion more than what the fuck you thought they was gonna make, and still the price still went down. We don't want to just give a fuck about what the company reports. We react to what the market expected. So let's say a company reports that they made $10 billion in profit. It sounds good, right? It should sound good. But if Wall Street expected 11 billion, the stock might drop. Make sense? So it's all about whether they beating or meeting expectations, right? They got to beat or meet expectations. Remember that. I ain't saying no crazy shit. I know y'all heard them 2 words. Meet and beat, and thought some other shit. You feel me? But I'm talking expectations and beating expectations, right? So on the flip side, if they only expected 8 billion and the company made 10 billion, that's a beat, and the stock might jump. So when you trade earnings, you're not just reacting to no numbers. You reacting to the difference between what happened and what we thought was going to happen. That's why I always say it's not what they report, it's what they surprise. We want to see them meet or beat this shit. So the 3 things to watch in every earnings report, this is what I look for every time. I'm looking at the earnings per share. That's the EPS. That's how much profit the company made for each share of stock. If the EPS beats estimates, that's bullish. That means the stock going to go up. If it missed, that's bearish. That means it's going to go down. Y'all put a W in the chat if you understand so far. I'm not going to just keep running my mouth and not knowing if y'all understand it. Now, also, while I'm yapping, I need y'all tapping. Hit the follow button if you're new here. And also hit the notification bell so you don't miss another live. But yeah, I'm looking at those. I'm looking at the EPS. I'm looking at the revenue. I want to know the revenue is the company's total sales. You see what I'm saying? So you could think of this like the top line, like the money coming in before expenses. And then I'm looking at the guidance. I want to know where the company tells the investors what they expect for the next few months. I want to know what the hell finna happen, what y'all got going on. If y'all guiding this shit higher, that means they expect more growth. That's bullish. If they guide lower, that's bearish. You want to always check these three because sometimes a company beat earnings, but they give bad guidance and the stock still gonna drop. It makes sense? We're gonna talk about the fun part, how to trade it. It's three main ways I come at this shit. This how I teach people. I let them know about the pre-earnings run up, right? So sometimes a stock gonna run up before earnings because a lot of traders expect good results. So you can trade that momentum. You can make money just off that move. You could buy a week or two before the earnings come out and then sell the earnings. You can sell the shit right before the report come out. How many of y'all ever did that before? You traded the stock 2 weeks or a week or two before earnings because you knew it was going to be a lot of volatility, and then you sold it right before the report. Why do you sell it before the report? Can anybody in the chat tell me why you would want to trade something that has earnings coming out before it has the earnings, and then before the report comes out, you sell it? Because you don't know if that company is going to meet or beat expectations. But you do know it's going to be a lot of volatility. It's a lot of movement, aka a lot of motherfucking money. So you want to pay attention to that because it will matter. The second way, I just wanted to make sure that you avoid the risk of a bad surprise but still ride the hype, right? This way, you're going to make sure you still can get in on the trade. But now, the second way, that was the pre-earnings. This the post-earnings. You could trade this shit after the earnings come out. Right. So once you see how the market reacted to it, maybe it gaps up 10% and holds strong. That's a sign of strength. Maybe the shit gap down 10% and keep on dropping. That's weakness. So you trade in the reaction. You're not gambling. You looking at what happened and you trading that. And then third, I like to trade on options on it. I like to do a strangle strategy because I know that the price is not going to trade sideways, that it's not going to consolidate. Instead, it's going to break out of a range. And I would just like to buy a call and a put at the same time, creating that range, right? And I want price to break outside that range within that given time. The way you do a strangle is you buy a call out of the money, a put out of the money with the same expiration date. This is the equivalence of betting on the Bulls and the Knicks at the same damn time. Let's say the Chicago Bulls is playing the New York Knicks and you don't know who the fuck gonna win, so you bet on both teams. Because you know one of them gonna come out on top. Either way it go, you're gonna win. You're going to win either way. Only way you don't win is if it's a tie, aka if it trades sideways. Stinky Pinky says, or an iron condor. You damn right. That's another strategy. Excuse me. So yeah. Let me see. So yeah, you want to make sure that you know all these different strategies that you can use to trade earnings volatility. So the idea is you can profit off big moves up or down without owning the stock itself. But, and this is big, if you don't understand how options pricing works, the stock can move exactly how you thought and you still gonna lose money. Because y'all don't understand implied volatility. Y'all don't know what IV crush is. Y'all, listen, when you trade in stock options, you are essentially borrowing 100 shares for a certain amount of time. And you need to make sure that this price is going to go where you predicted it to go in that certain amount of time, really before that certain amount of time is over with. You don't want to hold it till the end of the expiration date. You don't want to, oh, well, I got till tomorrow. It expires tomorrow. I mean, I think you held it a little bit too long if it expires tomorrow. Unless you just, extreme day trading and you only wanted to hold it for one day or whatever the case may be. All right. So I just want you to know you can use options, But you better know what the hell IV crush is. You better be paying attention to the implied volatility. I'm gonna explain it for you though. I'm gonna make it simple. Before earnings come out, everybody is expecting a big move. So that expectation is gonna cause the option prices to go up because we already know it's gonna go up. So we expecting a big move. So it makes the prices of the options go up because the market is pricing in the risk. But right after the earnings are announced, that uncertainty that we had disappears because the event already happened. So the volatility that was priced into the options collapsed, and that's why it's called an IV crush. So in plain English, the excitement is gone. It's gone. Where is it? Where is it? The excitement is. That's what mean. That mean even if you bought a call expecting the stock to go up, if it don't go up enough to beat that high options price, you still gonna lose money. That's why I always tell my students, don't trade earnings blindly with options until you understand implied volatility. Until you understand it, don't fuck with it. I'm telling you. I mean, sometimes y'all will be better off just buying the stock outright than you would be trading it because you don't know what the fuck you doing. You don't come to class. You don't call my phone. You don't ask no questions. Ask questions. They like, bro, why you yelling? I'm just saying, I'm trying to help you out. No, I'm trying to help you out, Shawty. I'm trying to help you out. Now we're gonna talk mindset. We're going to talk mindset. Professional traders, we treat earnings like a battlefield. We're going to get ready for this shit. We're going to study. We're going to wait for the setup. We ain't just making money pressing buttons and shit. Now, you thought you just going to click, clickety, click, and make some money. You thought you was just going to press some buttons and make some money and not do no type of due diligence, huh? You ain't going to do no research, not a lick of research. If this is your research, then that's weak as hell. Your research should not consist of you getting on TikTok, listening to somebody yapping while you not tapping. Tap the screen. Tap the motherfucking screen. Your research should not be you listening to what somebody else said. You better do some damn research, some real due diligence, right? I want to make a list of the companies reporting this week. I want to check the past earnings reactions. I want to see how that stock moved the last 3 to 4 quarters. I want to mark key support and resistance levels on the chart. That means the price areas where the stock usually bounce or fall down from. I'll tell y'all about support and resistance in a minute. Drop a W in the chat if you would like to learn about support and resistance. I'll go ahead and talk about that in a second too. But it's basically the floor in the ceiling. I want to mark the places on the chart where the price came down to and where it rose up to, and why does it keep stopping at this level that it rose up to and falling back down? If it gets to this level that it rose up to before, is it going to fall back down again like it did before, or is it going to do something different? These are all the things you want to pay attention to. I want to plan my entry, I plan my exit, and my stop loss before the trade even begins. Do you do that? Because if not, you should. It's going to help you tremendously. Plan your entry. Say, I'm going to get in here if the price come back down here. I'm going to get out here. This is where my stop loss going to be. And this is all before you even enter into the trade. You never want to go into an earnings trade without a fucking plan, because your emotions and their emotions too is going to kill you. It kills traders. But proper preparation prevents poor performance. Don't make me start pimping in this. Now we gonna like I said, we're gonna talk mindset, because trading earnings without the emotional control, you might as well be in a casino, gambling with a blindfold on at that. So you got to remember this: you're gonna miss some winners. You ain't gonna get everything. You're not gonna win every trade. You're not gonna catch every $10, $20 move to the upside or downside. Damn, I could have bought a put, or I could have bought a call. You would always miss some, right? You will avoid some losers too, though. You're gonna be like, yeah, I'm glad I ain't get in right there, because I could have lost a lot of money. Your job is not to catch every move. It's to catch the right ones and to have discipline doing that shit, right? So professional traders know how to wait. They don't trade every earnings. They focus on grade A setups, high probability trades. We want to see strong momentum and shit. All right, we're going to have a clean reaction. So I need y'all to know, like, now that we understand what earnings is and why they move the market, let's apply that to what's actually happening this week. We want to know what's actually happening this week. All right, what we got? Monday and Tuesday, we got some earnings coming out. Earnings coming out this whole week, but let's see. We got a massive week, actually. So some of the biggest names in tech coming out this week. We got AppLovin, right? Y'all ever heard of AppLovin? I want y'all to put these on y'all watch list. So I'm going to say them a little slow for you so you can, my beginner trader, so you can write them down or add them to your watch list. APP, AppLovin. That's the name of the company, AppLovin. We have ARM Holdings, ARM. Somebody said absolutely AAP. Oh, absolutely no AAP for sure. AppLovin. ARM Holdings is the ticker is ARM, like your arm. We have Robinhood coming out with earnings this week. Ticker symbol HOOD. We got Figma, Qualcomm, right? I mean, my buddy just called me and said she made a shit ton of money on QCOM. All dropping earnings after the market closes later on this week on Thursday. But then Friday, we got more action with MP. Y'all know we made a lot of money off MP last month. And Open Door, we paid a lot of bills, mortgages, rent, car notes, all. Open Door 2. We got SoundHound AI, Constellation Energy, and Enbridge. So this week is loaded. And if you know how to read these reports and react to it, the right way to react to it, you can catch some big ass opportunities. Now, I'm going to walk through it step by step, but I like to use Webull, so I ain't going to, I know that if you open up the Webull, you can go to the markets tab at the bottom, scroll down till you see earnings section, and it'll show you what companies are reporting today. But some of y'all brokerages will tell you too, you just got to look for it. If not, just look it up somewhere online, but you can always find the earnings when they come out, right? So if you tap on any company, scroll down, you will see a section called earnings, and that's when you can see the EPS, the revenue, whether they beat or missed earnings, and you'll see a chart showing how the stock reacted the last few quarters. So that's powerful because you're not just guessing no more, you're seeing the data. You can literally see if the stock tends to run up before earnings or if it dropped after earnings. This information is going to make you a lot of money. Do y'all got any questions before I continue? I got a bad habit of not reading the questions. Hey, showing support before I hit these books. Thank you, Mama Lala. I appreciate it. Any questions? Nope, no questions. I'm going to give it a few seconds. Y'all got any questions before I continue? All right. So with that being said, we're going to tie that into like this week's economic data because that matter. So Thursday, we got the Eurozone retail sales. We got U.S. jobless claims. They saying we ain't got no fucking jobs. Natural gas storage data. That's all dropping the same day that these tech earnings hit. So there's going to be a lot of movement in the market. Then Friday, the United States dropped the unemployment and the non-farm payrolls. So that's how many jobs was created. Why do we give a fuck about that, said? Because these reports impact how the Federal Reserve might act on interest rates. Why do we give a fuck about that, Sid? Because it's going to help you make money. It lets you know what to do. I'm telling you this, it pays to know this shit. When jobless claims are low and unemployment is falling, that means the economy is strong. And sometimes the feds react by keeping rates higher to slow things down. When the economy weakens, the Fed might lower rates to stimulate growth. And this is the key right here. You got these technology stocks like Apple, ARM, and Qualcomm. Those are extremely sensitive to interest rates. You see how I know that? How I'm paying attention to that piece of information? I'm telling you so that you can know how to trade it too. This is why earnings week is not just about the damn company. It's about the whole picture, the bigger picture. It's about the bigger picture. I want you to add APP to your watch list, ARM, Hood, FIG, QCOM, right? QCOM, MP, M as in Mr., P as in price. We got open, sound, SOUN, and then CEG and EMB. I want you to look at how the stock reacted last quarter. This is your homework. I want you to see if it ran up before the report or if it dropped afterwards. Did it gap up or down overnight? This is going to give you clues about the behavior of it. Because stocks usually like to repeat the same shit they did around earnings if fundamentals and the sentiment ain't changed much. So your job is to look for consistency. That wasn't a joke. I don't give a fuck why. I don't know why you pressed that button, buddy. Your job is to look for consistency. They like, nigga, I don't know what you telling us for. You the one pressed it. So the night before earnings or the morning of, I do three things. I'm checking to see what they expecting it to do, right? Because if you can look at the EPS and the revenue, you can find this information out. Let me see if I can show you what it'll look like. What does it look like? It'll look like, let me see. It'll look something like this. I can find out about a company's earnings report right on the damn app that you trading on. You can too. You can too. Let me see. Oh. Y'all see Bitcoin crashing? Hold on. So look, I want to look for the earnings estimate, right? I want to look for the earnings estimate. If QCOM is expected to make $2.25 per share and $9.6 billion in revenue, I want you to write that down. Then when the reports drops, compare what they actually reported to that estimate. I want you to look at the options chain. Look at all the options that you got to buy. Even if you're not trading options, look at the prices. It's gonna show you how much movement we expecting on that stock. If you looking at calls and puts and they both expensive, that mean that traders are expecting a big move. You can check the chart. Let me see. You can check the chart. Is the stock sitting near support or resistance? Is it overextended near resistance? That's going to help you know whether your risk to reward is going to favor an upside or a downside after this earnings shit come out. Right? And then how to execute it. When the earnings finally drop, it usually happen around 4 o'clock. The first move you're going to see is not the final direction. Don't fall for it. Don't rush. I don't want you to rush in. This is how professional people look at it. We don't rush. We want to wait 5 to 10 minutes for that first wave of volatility to settle. I'm going to watch the pre-market or the after hours chart. If the stock gaps up on good earnings and hold the gains, that's bullish. But if it gaps down and fades immediately, that's bearish. They call it bullish because when bulls attack you, they attack in an upward motion. So whenever people think that the stock market is about to go up, they call it bullish. Whenever we think that the stock market is about to go down, we call it bearish because bears attack you in a downward motion. So now you know bullish or bearish. I just don't want you to be confused about that. Maybe you never heard about them. But the third thing I want to do is look for confirmation the next morning. If volume stays strong and the move continues, you got a continuation play. If the stock reverses sharply, then you got a fade play. So I use Webull so I can view pre-market and after hours data by looking at the extended hours. So I'm gonna use Qualcomm for an example. The ticker is QCOM, Qualcomm. Qualcomm makes the chips inside of a lot of smartphones like iPhones and Androids, right? Both of them. So they earnings give us clues about the entire smartphone market. If they report strong sales, that tell us that the demand for phones and AI chips is healthy. That can lift not just QCOM, but also Apple, NVIDIA, and other microchip names. So one company earnings can literally create a whole move across a whole sector. That's why I say even if you don't trade every stock, You trade the reaction. So if Qualcomm beat earnings, you might buy a dip on Apple or AMD the next day because sympathy plays often follow the leaders. I like to call them sympathy plays. We look at Robinhood. Y'all know what Robinhood is. That's a trading platform. They earnings tell us about retail investor activity. So how many users are active, how much they trade, and how much cash is sitting idle. If Robinhood reports strong user growth, that's a bullish sign for retail market participation. That lets us know it's a lot of people trading. If it reports a slowdown, that's a signal that smaller traders are pulling back, and that can impact short-term momentum stocks. I'm going to talk about AppLovin and Figma. These are more software-oriented plays. Look, so all of these got earnings coming out this week. All of them have earnings coming out this week. Literally, every company that you are looking at is about to have a report come out this week where they're going to tell you how good or bad they're doing, okay? I know y'all can't see this, but you should be able to zoom in, but I'll zoom in a little bit. Because we got usually Monday and Tuesday first anyways. But where was I at? AppLovin. So AppLovin's business depends on mobile advertising. How many of y'all heard of AppLovin before? Come on now. Hey, listen, while I'm yapping, I need y'all tapping. You feel me? Hit the screen, tap the screen, push me out. Push me out. What they say, hype me up. Hype me up. If ad revenue is up on AppLovin, that can boost the entire ad tech sector like Meta and Google. So when you hear AppLovin beat expectations, that's not just about one stock. It's going to spark other names. And then ARM Holdings, that's another big one. They design microchips. That's like they designed the microchip architecture that we use in iPhones, laptops too, and even servers. So if ARM earnings give clues about where AI and semiconductor demand is heading, then you want to pay attention to it too. If they show strong licensing revenue or strong demand for AI chip design, that's huge. We watch this shit like a hawk. So remember how we said Thursday, all the jobless claims and natural gas storage, and Friday, they're going to have unemployment and non-farm payroll speeches and shit coming out? This is how that fits in. If unemployment comes in lower than we expected, that means that the job market is strong. The Fed might delay cutting rates, and that could hurt a lot of stocks that's dealing with technology. If employment comes in higher, that means that the economy cooling down, and then the Fed might cut rates sooner. I don't know. It just depends on how Jerome Powell old ass feeling, right? We don't know. We never know with Jerome's in the house. Jerome's in the house. We never know with Jerome wrong. We never know with Jerome wrong. So when you trading these earnings, you gotta have you gotta layer in all the shit that's going on in the economy too. So Qualcomm reports amazing earnings, but the job reports the next morning is too strong. Interest rate fears might cause the stock to fade. So that's how the professionals think. We're going to look beyond the headline. We're going to pull this shit all together like a professional. Before every earnings week, you want to build a playbook. You want to say something like, okay, I want to watch for sympathy trades. What's a sympathy trade? I'm going to show you how to find that too. Let me show you how to find that. So right here, when I go to company, if I scroll all the way down, it'll show me the peer comparisons. It'll show me the peer comparisons. I'm gonna tell you why this matters. It's my favorite earning strategy is a sympathy play. A sympathy play is when a stock moves because another company in the same sector just had earnings. So if Qualcomm beats expectations, Apple and NVIDIA might also run because we're going to expect the same type of strength in microchips. If Robinhood beat expectations, then Coinbase, SoFi, hell, maybe even Webull might pump. So even if you miss the main earnings report, you can still trade the reaction in the related names. So I like to call it like a second wave opportunity. Like if you was a surfer and you miss one big ass wave, there's usually another wave that's coming because waves moves in waves. So the market don't move on what's said. It moves on how on how the market feel about what's said. I'm gonna say that again. It don't move on what's said. It's about how do we feel about what's said. Just because they say it's a war, don't mean it's gonna go down. Sometimes this shit already be priced in. Like if the CEO sound confident, right? He all hyped up and shit, and he used strong language like we're seeing accelerated demand. We feel that energy and we buy, right? But if they sound cautious, we monitoring how the market conditions, react to it real closely. Cause we that's code for we nervous, like we don't really know what the fuck going on. But you find the sympathies. These are the companies in the same sector, and when one reports, the others often follow the same direction short term. So you want to watch for which one has the most volume and which chart look the cleanest. And that's usually where traders go next. But this something Wall Street don't talk about much, right? After the earnings, stocks like to drift in the direction of the surprise for days, sometimes even weeks. That's called post-earnings drift. If the company beats expectations and gaps up, it sometimes it usually like to keep going up higher and higher for a while. We are in a big earnings week right now. I mean, literally, they a lot of them finna drop how they doing. So I want you to be prepared for it, so you know how to trade it. We instead of chasing the move, like as soon as the earnings come out, instead of chasing the move, it's smarter to wait for the pullback the next day and trade with the trend. You want to let the emotions and shit burn off first. Excuse me. I need some water. All right, so when NVIDIA reported strong AI demand earlier this year, the stock gapped up huge. But usually NVIDIA going to tell you that they did good or that they doing good, and the market won't give a fuck. So sometimes you will think that they had good earnings and that means it's going to go up, but it don't always mean it. I'm going to talk to my investors, those who care more about building long-term wealth. The earning reports tells you which companies are executing and which ones are struggling. You don't need to guess which stock is the next big thing. You don't need somebody giving you signals, call outs, none of that shit. Just follow the consistent earners. Like Apple, Microsoft, NVIDIA consistently beat earnings and raise guidance. That tell you they got pricing power and strong leadership. These are names you can hold and add whenever the market dip. Because when a company keep missing, cutting guidance, blaming the economy and shit, that's a red flag. Like that's what happened to me and G-Wave. Fuck G-Wave. I'm gonna say it loud and clear. Fuck G-Wave. Anyways, you don't gotta hate them like I do G-Wave. You just gonna move your money towards where the strength is at. See, the difference between beginners and professionals is not the tools, it's not the technicals, it's how we react. I keep telling y'all this shit is 90% psychological. Beginners chase the move. Beginners chase money too. We don't chase money. We attract money. If you chasing wealth, it's running from you, right? We are magnets for this shit. It's coming to us. We attract it, manifest it, etc. We gonna literally prepare before it happens, because if you fail to plan, then you plan to fail. The beginners look for tips. We look for data and for patterns. So the best traders, we use earnings to build a story, because each report gonna tell you where the money is flowing. Y'all know how currency work. The shit gotta flow. Yeah, they did me bogus, Stinky. They did me bogus. But I did myself bogus. I shouldn't have been so bullish on them. Now, each report gonna tell you where the money flowing. Is it going into AI? Is it leaving banks and going into semiconductors? Are consumers spending? Are they saving? The more you read earning reports, the more you're gonna see the patterns before the big moves happen. So I'm gonna slow down and define a few key terms so everybody locked in. I talked about the EPS. That's the earnings per share. That's how much profit the company makes per share. Also the revenue. Some of y'all are business owners and you don't have necessarily shares to worry about sometimes, but you do have to worry about revenue. That's the total money coming in from sales. So you know how important it is to know about a company's revenue. We got margin. That's the profit after they have all their expenses. The guidance, which is the company's prediction of what's about to happen next or what they got planned. We got the consensus estimate, which is what Wall Street expects. Whenever you hear them say beat, they're talking about if a company did better than they expected. If you hear them talk about the word miss, or the term miss, they saying the company did worse than they expected. Now, I told y'all what a sympathy play is. That's when a related stock moves because of another company's earnings. Volatility, the word volatility is how wide or how calm the price swings are. Is it going to go up a lot or is it going to go up a little? Right? So when you understand these, you stop reacting emotionally and start trading intelligently. Like, you know, everything, not just those small, not just the jargon, but everything. Right? I want you to know that pretty much we didn't cover how to prepare for earnings, how to trade them, how to understand guidance, sympathy plays. I want you to think like an investor. If you combine all that, you got a full earning strategy. You build your watch list every Sunday night. Mark the earning dates on your calendar. You want to read or listen to the earning calls to figure out what's going on and to get a guidance. You want to look for sympathy setups. You want to use patience for the post earnings drift, and you want to think long term, not just short term. Right? So I'm gonna do y'all a favor. Put a W in the chat if you want to learn how to read a stock chart. I will give you a cram course real quick on how to read a stock chart. We're gonna use the S&P 500 as an example. I'm gonna use SPY as an example. This is an ETF. An ETF is an exchange traded fund. Y'all drop a W in the chat if y'all want to understand, and understand what's going on this chart when you look at it, or when you look at any stock chart. I'm gonna explain it to you tonight as if you are a beginner. If you would like that, put a W in the chat. I don't see enough W's now. Where is it? Y'all taking forever to put a W in the chat. Okay. I'll wait. Not enough winners. Winner, veggie dinner. What's up? If you're new here, hit the follow button. If you're new here, hit the follow button. If you want to learn how to read a chart, maybe it's 50 motherfuckers in here that already know. Maybe that's what's going on. Do y'all already know? Because if not, if y'all already know, I ain't gonna waste my time. But if you would like to learn, let me know right now, and I'll go over exactly what you looking at. Y'all want me to move on? Say move on, bro. We already know. Say move on. We already know, coach. We don't want to go over it. We already know. Move on. Excuse me. All right, but y'all acting like Eeyore off Winnie the Pooh, boy. We want to learn. Maybe so. I guess so. Y'all better stop playing with me. Huh? Go to sleep. If you sleepy, go to sleep. Wake your ass up. No, I'm just playing. Listen, I'm going to go ahead and go. I'm going to go on with the show. Y'all ain't got to engage. Y'all acting lame as hell. Y'all ain't going to say W in the chat. When I say W in the chat, y'all supposed to be dropping W's in the chat. All right. This chart is showing SPY. SPY is an ETF. An ETF is an exchange traded fund. Okay? It's a basket of stocks. You hear me? Like the S&P 500. S&P stands for Standard & Poor's. 500 is the 500, the 500 biggest U.S. companies. The main group of the biggest U.S. companies. So right now we're looking at a 4-hour chart. That means that each one of these bars or candles show what the price did during a 4-hour period. So the green candles going to mean that the price went up during that time. The red candles mean that the price went down. Each candle show you 4 things. Where the price opened at the start of those 4 hours, where it closed at the end, how high it went, and how low it went. Put a W in the chat if you understand that part before I keep going. I need to know that I need y'all to engage. So I know that you're learning before I go on. Then I go on and y'all be like, hey, can you repeat it? No, I need to make sure y'all getting it before I go on. I know you get it, Stinky. I know you get it, Ava. I know you get it, Love. I know all my peoples get it. I'm talking about these other little rascals in here. It ain't grew here. Y'all new here. Hit the follow button. Hit the notification bell. You are now in class. And when I say raise your hand, if you don't raise your hand, I'm sending your ass to the administration office. Let your mama and your daddy know you weren't paying attention to my class. You will go to ISS. Put a W in the chat if you understand. If you understand what I'm saying. Since y'all dry as hell like your ex lips, all right, I'm gonna go ahead and continue. So the green candles mean the price went up. The red candles mean the price went down. So if you see a green candle, that means it closed higher than it opened. The buyers were stronger. If it's red, it closed lower than it opened. The sellers were stronger. I want you to understand also the lines that you see on the candles. So you see them, you see how they sticking out from the candles? Those are called wicks. Every time you've ever lit a candle, it had a wick, right? These show you the highest and the lowest price that was in that 4-hour period. So the thick part, right? The thick part, like I like my chicks, that's called the body. That's the range from where the price opened to where it closed. The long wicks means there was a fight, right? A fight between the buyers and the sellers. The price tried to go higher or lower, but it got pushed back up or down. And the short wicks just mean that the price moves slowly or smoothly, I'll say. So now we're going to talk about these smooth, curvy lines that run across the chart. You see a blue line, you see an orange line, and you see a purple line. Those are moving averages. A moving average takes a bunch of past prices and finds the average. Kind of like if you took your grades and averaged them. So the blue line uses the last 5 candles, the orange uses the last 10, and the purple uses the last 20. We call these EMA 5, EMA 10, EMA 20. You can change those settings to make it where it show you the previous 9 candlesticks, 25 candlesticks, 200 candlesticks. You can edit that and make it show you, and the numbers are going to show you whether it's a short-term trend or a long-term trend. The lesser amount of candlesticks you counting, the shorter the trend. So if I'm using a 200 EMA, I'm just looking at the moving average or the average price of this ETF over the past 200 candlesticks. I hope that's simple. So why do moving averages matter? Why do we give a fuck about a moving average? Because moving averages help us see the trend if the price going up or down or sideways. If the candles are mostly above those lines, the price is in an uptrend. That means the buyers are winning. If the candles are below those lines, price is in a downtrend. That means that the sellers are winning. So when price is close to those lines and going back and forth, the market is taking a break. We call that consolidation. Do y'all understand? Put a W in the chat if you understand. Open your keyboard, press W and press enter. Okay? Y'all, this also helps me with engagement. If y'all think I'm just doing this shit for shits and giggles, y'all got me fucked up. I'm doing this so I can push this out to a larger amount of people, help a larger amount of people, not just y'all. So it helps me when y'all tap the screen. It helps me when you engage, when you comment, right? I would like it if you shared and liked the live also, right? And also hit the follow button, hit the notification bell so you don't miss another live stream. I got some great to offer you at the end of the show if you made it here this far. So now I'm gonna continue. I just letting you know why moving averages matter. So here you can see that the price went up at first, then it dropped under the purple line, which is the long trend EMA. That's where the momentum shifted at. So it shows buyers started to lose control and the sellers took over for a while. Now I want you to look at that red slanted line. That's a trend line. I put that there. Look at the red line that's slanted down from the left to the right. That's called a trend line. A trend line connects the highs when price keeps dropping each time it tries to go up. Every time the price touches that line and turns back down, that shows that the sellers are stepping in again. And I can pretty much predict what's going to happen when the price gets back to that line again the next time. When traders see that red line, and when we see a trend line, we know the market's still in that trend. Or if it's a downtrend or an uptrend, we're going to know based off the trend line. If the price ever breaks above the red line and stays above it, that's a sign that the trend could be changing and I know what to buy from there. You will know what to buy from there when you start using trend lines and you pay attention to if the price breaks and closes above it and stays above it or below it. It'll help you know. Some of y'all confused like, how do I know when to buy or sell? I use technical analysis to help me determine when to buy or sell, when to get in or get out, when to enter or when to exit. And I use a stop loss to protect myself from any big loss. Your trade should go in 1 or 4 ways. Y'all gonna get tired of hearing me say this shit until it click in your head that it should either be a big win, a small win, a break even, which means you didn't win or lose, or a small loss. A big loss is never a fucking option if you use a stop loss. Or some of y'all say fuck a stop loss, but you at least got a mental you got some type of plan to where you gonna get out if it go the wrong way. Cause if not, you will get violated. I ain't gonna tell you what, you're gonna lose your money. It's gonna hurt your feelings because you're gonna wish you had got out at an earlier time with more money. You see what I'm saying? That's what trading. That's the risk that you taking as a trader. I just want y'all to know you can lose all your damn money trading because you don't know what you're doing. And you could have just took that money and invested it into a Roth or some type of account that would have benefited you and made money for you. Your money can make money for you without you trading. There are safer ways for you to make money, right? I love cats, but I hate this saying, but I'm going to say it. There's more than one way to skin a cat. You know what I'm saying? I know a lot of y'all want to learn how to trade and how to make money trading, but you're better off buying and holding. You better off opening up an investment account and investing to make sure that you building a solid financial foundation. But instead you trade and then you lost more money trading this year, and you could have just invested that money and made sure that you was straight in the future. Because that money will grow interest. It will grow interest. That's right, Stinky Pinky. Everyone should have one. Sometimes people wait till the last second. You know what I'm saying? And in that case, it's a little bit different for them. But we still got a plan for people that waited till the last second too. We can help you as well. Inbox me if you're interested in opening up you an investment account to make sure that your money make money for you. You don't have one, it's time for you to get one. This is your sign. So now I'm gonna go back to the chart. Go back to the chart. The yellow horizontal lines that you see, that's where I marked support and resistance, right? Support and resistance. Literally, this is the most important thing to me when it comes to trading. I don't want to say just to me. This is like the number one thing that you can use to determine where the price is about to go. So you see the yellow lines. The top one is around $689.88. That's the resistance. That's called resistance. Say resistance. That's called the ceiling. We call resistance the ceiling. That means every time price got close to that area, it couldn't go higher. The sellers stopped it by pressing sell, by clicking sell, by buying puts, whatever the fuck you want to call it. Selling, really not buying, but selling. Taking profits. The price went all the way up there and we keep taking profit. The bottom line, the bottom yellow line around 666, right? Around 666, that's the support level. That's where the buyer's stepping in at, and we stop the price from falling lower. Because when the price gets to that level, there's a lot of buying that's happening. So I want you to think of support as the floor and resistance as the ceiling. Price is going to bounce between them until one of them finally breaks. Do y'all understand support and resistance now? If you know support and resistance now, put a W in the chat, ladies and gentlemen. I'm gonna wait. Put a W in the fucking chat. Stinky Pinky. All right, you get it. That's all that matters. It's quality over quantity tonight. That's all I care about is that somebody got it. You know what I'm talking about? It's not showing me everybody comments. Maybe I got it on hey, listen, if y'all can't comment, hit the yellow heart at the top. It might be orange. Hit that heart at the top next to my name, right? Send me that daily heart me, and you might be able to leave a comment after that and ask me any question that you want to ask. I probably got it to where you have to follow me or hit that heart in order for you to comment. I'm not sure because I don't see any comments tonight, and it's kind of awkward, but it's okay. As long as y'all learning, that's all I care about. If there's any questions you need to ask me, feel free to inbox me. Okay, I'm not bougie. I'm going to answer the question for you. We're going to get to the bottom of it because I'm tired of y'all paying people $5,000 and then coming into my live telling me, Dad, I learned more in your live than I did and I gave them $5,000. Somebody tell you to be out here overpaying for courses and shit, overpaying for mentorship and shit. You could have took 4/5 of that money and invested it, right? 3/4 of that money and invested it, it would have did you better than hiring somebody to fucking rob you slowly. Now, support and resistance. We noticed that the price came all the way down to 666, and then what it do? It shot up, right? Overall, it shot up to 689, but when it got to 689, it bounced back down from there. So I want y'all to tell me, what do y'all think is going to happen if the price gets all the way back down to 666? Just hypothetically speaking. The price went up to 689. If it comes back down to 666 and doesn't go below that yellow line, where do you think it's going to go after that? What do you think it's going to do if it comes back down to the yellow line and does not go below it? If the price does not go below that yellow line at the bottom and break below it, it will bounce off that line just like it did before and go right back up. So right now we have a new level of support because the price went up to 689, and when it came back down, it did not go all the way back down to 666. It created what we call a higher low, okay? Because the price, it went low, but it didn't go as low as it did before. That is a higher low. But if you look at each time the price went up after it went to 689 and came down, it created a lower high. So right now the price is creating higher lows and lower highs. Do y'all understand? We have a new level of support at 679. The price keeps bouncing off that level now. And it's bouncing off that 679 level, and it's bouncing up to that red trend line, the slanted red trend line is going to hit that line and come back down to 679, hit that line, come back until it breaks. When it breaks, then I know which way to go. So literally when the price gets near resistance, you want to start watching to see if it'll break above, stay above, or turn back around. Or, you know what I'm saying? If it breaks above and stays above, that's a breakout. And it usually going to keep going higher, like heavy on the usually. If it touches resistance and turns red again, then the traders might short it. And that means that we betting that the price going to fall. Even though this ain't fucking gambling, they betting that the price going to fall. This is the cousin of it. When price drops to support, same idea. If it bounces back up, we're going to buy it. If it break below, it's bearish. It just means that the sellers won that round. Now, if you look at the volume bars at the end, if y'all are learning anything, the least you can do is hit the follow button. You might not be able to comment. I don't know what I did to my live, but hit the follow button at the bare minimum. That's what you can do. If you learned anything in my live tonight, it will help me out. If you hit the follow button, maybe share the live out to a few of your friends that you want to learn some financial literacy tonight or how to trade. Because this part of the live is not even the meat and potatoes of it. This is the potatoes. I ain't got to the meat of it yet. I ain't got to the juicy part of the live yet. This is just for my traders to get that trading monkey off your back. So down here at the bottom, right, you see green and red bars. That's called volume. Volume means how many shares were traded during that candle. So the green bars means that most, it says we have detected inactivity during your current live. Complete the verification. How is it inactivity? They capped out. Some comments in this live were filtered. So yeah, that's what's happening. The comments is getting filtered and I don't know why. I don't know what's going on. It's all right though. I'll figure it out. I did the little puzzle piece. But yeah, anyway, so the volume bars, right? It's going to let you know how many shares were traded during that candle. The green bars mean that most of the trades were from buyers. The red bars mean that most of them came from sellers. High volume is going to tell you a lot of people was active and that the move was strong. And low volume just means that not many traders was involved in that, and it might be weak or it could be fake. Then you got the MACD. Y'all ever heard of the MACD? It sounds like a pimp name, but I ain't talking about no pimp name slip. About the MACD. The miggity Mac that looking at. It's the MACD. The moving average convergence divergence. This is how experienced traders use this indicator. Let me see if I can show you, let me see. MACD, the MACDizzle. Yeah, my comment settings are out of whack. I'll fix it. I don't know if I can do it mid live, but yeah, I don't think I can do it mid live. And then people attention span, by the time I get done fixing it, they'll been and went home on some go home Roger, comment settings, allow comments, filter comments. I got the filter comments off so y'all can say whatever y'all want to say. Show the most sent comment. All right, yeah. I don't get it. I got it to where the comments is on. Everybody say something in the chat real quick so I can see if it's my settings. Y'all let me know if you can't do it. How they gonna let you know if they can't say something if they can't say something, fool? I'll say some stupid shit. But nah, check it out. We moving. I'm just gonna keep it moving. Big Pep said, what up, though? But you a member, though. That's why you can talk. See, you a member. That's why you could talk. They probably can't talk because they not members, though. This might be one of them members only type of things. Y'all need to hit that hard at the top and lock in. Because why not? This is a classroom. The people that can't comment is the ones that just come and go. I'm looking for the ones who serious. Right? You had to pay? Damn. No, I don't want y'all to do that. I don't want you to pay to talk, Big Pep. But you locked in, though. Hey. Come on, some $9.99. You got access to the Discord. You just got Discord. You just got the premium Discord just then for half off. For more than half off. Because I'm just gonna give it to you. I got you. Don't trip. But now, we move into this section right here. It's the MACD. It stands for Moving Average Convergence Divergence. I don't want you to worry about that long name. All right, this is what it really means in plain English. This tool helps us see if the price is gaining energy to go up or losing energy and about to drop. This is an indicator. It's called a lagging indicator because it's telling you what the price then already did. But you can look at it like a speedometer for the market. You will see two lines down here. One is usually blue and one is orange. When the blue line is above the orange line, that means that the market's getting stronger. Buyers are in control. Y'all hear me? You can put this on your chart and use the MACD as an extra trigger of confluence. Just an extra piece of confirmation. It's an extra piece of reassurance that you right about where the price is about to go. It's going to help make you money. This is not financial advice. So when the blue line is below the orange line, that means the sellers are in control. You'll also notice bars that go above or below the middle line. Those bars are called the histogram. When the bars are above zero, price usually want to go up. When it's below zero, it usually want to go down. Again, heavy on the usually. On this chart, the MACD bars are below zero, right? I'm going to go back to the chart real quick. I just wanted to show you how the MACD works real quick before I go over that. So I'm going to go back to SPY. The S&P 500. All right. So if you look at this chart, the MACD bars are below zero and the blue line is under the orange one. That means momentum is bearish or weak. And the traders see that and be like, okay, well, the market's slowing down. I'm not finna rush in. I'm not rushing to buy until I see that flip. I'm trying to give you my mindset and what I'm thinking when I see that shit. So what I'm thinking is when the blue line crosses above the orange line, that's called a bullish crossover. It means buying pressure might be starting. When the blue line crosses below the orange line, that's a bearish crossover. It means that the sellers are taking over. So I'll use this to confirm what I already see on the chart. So if the price is starting to move up and the MACD crosses upward, that's a strong double signal. If the price is dropping and the MACD crosses downward, that confirms the downtrend. I'm also put you on the RSI. Y'all know I like to use the RSI, Relative Strength Index. So the Relative Strength Index, this one is super popular because it tells us when the market might be overbought or oversold. So it's on a scale from 0 to 100. If RSI is 70, or I heard Drake say, we can go 0 to 100 real quick in my head. If RSI is 70 or higher, the market is said to be overbought. That means that the price has gone up too fast. And then the trader's going to expect it to cool off or pull back soon. If the RSI is 30 or lower, the market is oversold. That means that the price then dropped too much too fast and a bounce might be coming. So right now, the RSI on that SPY chart is at 49, which is right in the middle. That means that things are balanced, not too hot, not too cold, and the market is chilling. It's chilling right now. It's taking a breather. We pretty much going to use RSI to let us know that whenever it's climbing and cross above 50, that's going to let us know it's a good time to buy. Right? We starting to win. When the RSI is falling below 50, the sellers are taking over. When the RSI is above 70, people start locking in profits because it's been overbought. When the RSI is below 30, people looking to buy, especially then, because it's oversold. So when it's climbing and crosses above 50, cool. You know that this can end up at 70. That's why I say it's a good time to buy, but you really want to buy when the RSI is below 30 because it's oversold. So RSI don't mean buy or sell itself. It's just a clue. You combine it with what the price and the volume is showing. That's how you use it. You put it all together. I want you to think about this shit all together. Now that you know what every piece of that chart means, I'm going to go back to it. Any questions before I continue? Any questions? Any questions, you got to subscribe to ask the question, I guess. But any of my subscribers got any questions? Anybody else, you can inbox me and I'll get up with you. If you're looking for mentorship or help, or you just want to build a solid financial foundation, I'm your guy. Go ahead and inbox me your name and your number, and I'm going to get you together. All I need to do is be able to do, you can also fill out that 5-minute survey in the link in my bio. Fill out that survey in the link in my bio. We're going to get you together. Now, all right, you know that every piece of this chart means how profitable a trader could pull all this shit together step by step. We can make money from this shit, right? We're going to start at the top. We're going to look at the candlesticks and ask, is price making higher highs and higher lows, or lower highs and lower lows? That tells us if it's trending up or down. Then we're going to look at the moving averages. Are the candles above those smooth lines or below them? If it's above, that's a sign of strength. If it's below, that's a sign of weakness. We're going to check the trend lines. We're going to see, that's going to tell me where the next battle going to happen. Will the buyers or the sellers win at that key level, at this key spot? I call it, it's called a key spot because this is where the door going to open for you. I'm going to confirm momentum using the MACD and the RSI. If MACD and RSI both agree with what the price is doing, that gives confidence in the trade. I now have a high probability trade, which means that the trade will more than likely go in my favor. So look at the chart again. Price made its way all the way up to 689. I told y'all that's resistance. Then it turned red and dropped. So the sellers took over. The MACD was below 0 at that time, showing you that it was weak. The RSI was around the middle, not strong enough to push the shit up again. A trader watching this might say, okay, I'm not buying here. I'm going to wait to see if the price can break above this red line or if it's going to reject it again. And what happened? It rejected it again and dropped lower. That's a good example of how these tools work together. So here's a simple, easy to remember fucking trading plan that's going to help you whenever, and we're going to use it applying to this chart. So you just take that and run with it. I want to wait for price to either touch the support, right? That bottom yellow line all the way down there, or resistance at the top yellow line. I want to watch how the candles form when it get there. I want to see if it show a strong wick, meaning that it tried to go up higher and it failed. That's my clue of a rejection. I'm going to look at the MACD and the RSI. If they both show weakness, that's my confirmation that this shit could be going down. I'm buying puts, so I'm pressing sell if I'm trading futures. If it break above resistance and MACD turns up, that's your signal for a possible rise. And I'm going to always wait for the candle to close before making my decision. That's going to keep you from reacting too fast. So like 20 people left the room before they could hear that part. But I mean, shit, that's the price of admission, is paying attention. The price of admission is paying attention, right? I ain't asked y'all for no money. All you had to do is spend time and pay attention. You did have to spend and pay. You spend time and pay attention. So the candle's going to show you who win in each round, the buyers or the sellers. The moving average is going to show you the overall direction. The trend line is going to show you where the market keep turning. The yellow line's going to show you the floor and the ceiling. The volume bar is going to show you how strong that move really is. The MACD and the RSI is going to show you when momentum is shifting. So by combining all of that, you can look at any chart and instantly tell what's going on. That's exactly what professional traders do. We don't guess. We read the chart. If you understand, hit the follow button. If you understand, hit the follow button. I want to make sure y'all get it. I want to make sure y'all get it before I continue, because I noticed that y'all can't comment. So if you get it, hit the follow button if you learned anything new tonight. So now that you know how to read the stock chart from the top to the bottom, I want y'all to practice. I want y'all to paper trade, right? Start studying. Start studying. Paper trading is practice. It's great for you. You get to fuck up fake money so you don't fuck up your money, right? Now we on to the best part of the live. We on to the best part because I know what I see. I know who I see. We're going to talk about the financial freedom experience. I'm here to show you how to make money, keep money, and pass it down the right way. Most people talk about making money, but very few ever explain how to protect it, how to build a legacy that outlived them. Tonight, we're going to do all that shit. The market, protection, and generational wealth. Now, we live in a world where everybody chasing income, but ain't nobody chasing structure. Wealth is not about how much money you make. It's about how long the shit stay with you. So when you learn to build a system, you're not just hustling. The money going to start working for you instead of against you, right? Tonight, I'm not here to sell nothing. I'm here to educate you on what the wealthy families already know. So we're going to start with what we all love. Matter of fact, we already started with it, the stock market. Trading is power. It teaches you control. But if you trade in profits, and your profits ain't protected, you just building sandcastles and a big ass wave gonna come through and wipe out everything. You need a foundation. That foundation is built on protection, legal protection, financial protection, and personal protection. Right? So some of y'all got crypto or care about crypto, right? All my crypto bros or whatnot. A lot of y'all got all this shit connected on the internet and you just not protected. Identity theft is something your ass need to have. It's a service that's going to monitor and alert and help restore your identity if somebody steal your personal information. You think it's a game, but it happens. In today's world, your name is your first fucking asset. The hackers don't just steal passwords. They going to steal your credit card. They going to open loans up in your name. They going to file taxes in your name. We just helped somebody get identity protection the other day. They found out they baby had a fucking house in their name, in the baby name. You think you think it's a game? I'm not bullshitting. Like, it's people out here. I know another pandemic is on the way. Don't get caught lacking. You wouldn't leave your house unlocked, so don't leave your data unlocked either. So if you interested in that, if you interested in knowing, if you would like a peace of mind knowing that you protected on that level, inbox me and I can help you get identity theft protection. Inbox me right away. Make sure you do it immediately. Your name and your number and the best time to call you, and we're going to get you together. Also, insurance is simply a fucking contract that transfers financial risk from you to a company. So this matters because one accident, one fire, one flood, one death, any of that shit you work for gonna vanish. You like, for real, it hurts. So without coverage, you're not just fixing some shit, you replacing some shit too without that coverage. So I seen a lot of people lose cars and apartments because they didn't realize that their basic policy didn't cover theft or natural disasters. Like, paying for good coverage ain't just about paying more. It's about paying smart. Sometimes we can restructure it and save you hundreds of dollars a year. That's money that you can be using to invest or to trade. Some of y'all like, man, I ain't got enough money to trade because you paying too much fucking money elsewhere. I ain't got enough money to invest because you spending too much money. Too much money on other shit. Just think about how much money y'all spend on car insurance. And if you spend too much money on car insurance, inbox me. I'm going to make sure we get that shit down. And when we get it down, you're going to take the money that you save and you're going to reinvest the returns. That's what this is all about. Now we're going to go toward the insurance part. This life insurance is a financial tool that pays money to your loved ones when you pass so that they don't inherit your debts. If you don't give a fuck about that, get out my live if you don't. I'm just playing. For real though, get out my live if you don't care about your family, bro. If you don't care about your loved ones, if you don't care about your children, get out of my live stream. You are a lame. You are weird. Literally, because everybody dies. Not only that, this is a financial tool that's going to pay money to your loved ones when you pass. But there's more. Certain types also build cash value that you can borrow from while you're alive. I don't recommend it, but you can. You could turn you into your own bank. This matters because if you pass unexpectedly and you don't got protection, your family may lose the home, the business and shit that you done set up. It's about peace. It ain't just about death. Rich families don't skip this shit. Rich people don't skip this. They use it to store wealth safely and tax-free. Do any of y'all know about trust? How many of y'all own a business or own your home and you don't have it in a trust? Have you ever heard of a trust? Have you ever heard of a trust? Y'all don't know what a trust is? A trust is going to protect your assets from lawsuits, taxes, and probate court. It's a legal entity that holds and manages your assets, money, property, and business for the benefits of others, right? So when you got a trust, your money and your property is passed down directly to your heirs. No delays, no government interference. You ain't got to worry about the government coming in telling you shit. So if you don't have a trust, inbox me. We're going to get you a trust. If you are not covered, inbox me. We're going to get you covered. Maybe you are covered, right? But inbox me. We're going to see if we can get you a better fucking policy because you want to take the money that you save and invest it into the market. I'm bringing it all back to the stock market. Because you do not want to miss out on the gains that they have in the stock market. Some of y'all are going to miss out because you let somebody trick you into buying an IUL. You let somebody give you financial advice who was really only an insurance agent and they not a fucking financial advisor. So you got financial advice from somebody who don't have a fiduciary obligation to make sure that they tell you the right thing. So without a trust, the state gonna decide what happens to everything you own. Without a will, the state gonna decide what happens to your children. You need these things. I'm not telling you shit that you don't need. Inbox me so we can make sure that you get covered all the way around the board. And then, only then, can you trade comfortably. You can trade comfortably then. You have a solid financial foundation. At that point, you can cut the fuck up in the market. And you're going to make a lot of money from there because you got your money making money for you. Your money will be making money for you at that point. For those that don't have a will, that's a written document that states who gets what you got when you pass away and who make decisions if you can't. The will matters because without a will, the court going to choose for you. Do you want that to happen? It could take years for your family to get, somebody said with the will, the state, without the will, the state decide, right? So it could take years. I'm talking about years for your family to get your Robinhood, to get your stocks that you got, right? Don't you got some stocks you want to pass down? Maybe you don't, but you want this shit. You want the state to get your shit? That's hilarious to me. Want the state to do that. Y'all don't want they to decide what happens to your assets or your children. Who the hell I got coming in here? Who is this? What did I do? Yeah, what did I do? How did that happen? What's going on here, TikTok? Anyways, you want to make sure that you got all this shit figured out because without a will, it's going to take years for your family to get your accounts and they're going to pay legal fees on top of that to get it. Inbox me today for us to get you a will, for us to get you a trust if you need it. Maybe you don't have life insurance and I swear you need life insurance. My mom passed last year. She didn't have it. I didn't know much about it. And I swear, y'all, I feel like her ghost literally is pushing me towards everything that I'm doing. I don't want to see nobody else go through what I went through. I didn't get the chance to mourn in peace. I had to go back to work 2 days later on a construction site, crying like a fucking baby because I was torn to pieces because somebody I loved with all my heart died. And I wasn't able to build a legacy behind it. I had to go back to work shortly after. So don't do that. Don't do that to your kids. Don't do that to your loved ones. Also, your parents don't need to do that shit to you. So call they ass, because sometimes they got a fucked up policy and you think everything good and you're going to be the one left to find out that you not. Right? They think you let them handle it, but it's really your money that you playing with by by you not making sure that the policy that your parents got is on point. I seen it firsthand. You thought she had a good policy. Your mom or your dad passed away or your grandma passed away and somebody else getting the money because you didn't take the time out of your day or out of your life to make sure that the shit was on point. I'm doing free policy reviews all week long. Inbox me and I'm giving out free. We're going to go over your life insurance policy free of charge. And the only thing that we're going to do is find out if we can get you a better one. And if not, cool, you got the best policy that there is. That's fine. So inbox me if you're interested in that. Also, we're going to move to legal protection. That's one of the most overlooked parts of wealth. Access to a licensed attorney for advice, contracts, or defense without paying hourly rates. LegalZoom. I can get you the plug with LegalZoom. I got a guy over there that's going to make sure you protected. You're going to pay a monthly fee for legal protection. You're going to have a lawyer on deck at all times. Right? But now we got to the growth side, investment accounts, vehicles where your money going to earn returns like stocks, ETFs, mutual funds, retirement plans. I want you to start investing. Become investors, not just traders. Not just traders. The wealthy don't just save money. They invest consistently and protect their profits with insurance, with legal strategy. Protection and investing are not opposites. They are partners. One side gonna build, the other side gonna defend. So if you see now why both offense and defense matter, inbox me. If you see why it's important to have a solid financial foundation, inbox me. A lot of poor people, not poor because they fucking poor. They don't have a financial advisor or a financial coach or a financial planner in their corner. Did you know that without this, you will show up to retirement with $1 million less than what you would have if you had somebody in your corner? Rich people have financial advisors telling them what to do with their finances, advising them what to do with their money. So we done went over identity protection to guard your name. Inbox me, I can help you with that. Auto and home insurance to guard your assets. I can help you save money there or set you up there. Life insurance to guard your family. You definitely need that. I should see everybody inboxing me their name and their number and the best time to call them when I get off this live. Don't play with it. Trust. If you have a trust account or you don't have a trust or you need a trust and you need a will, inbox me. We're going to make sure that we use the will and the trust to guard your legacy. We got legal plans to guard your rights and investment accounts to grow your future. That's a full circle. You're going to make it, protect it, multiply it, and pass it down. Did you know that a large percentage of the second generation millionaires blow the money? So you get rich and pass it down to them kids and they just going to blow the shit because you ain't teaching them financial literacy. So for those who feel called to teach this to others, I'm also building a team of people who want to work from home, who want to build a business from home, who want to help families, who want to help families protect what they built. If you love helping people and you want to learn how to turn this knowledge into income, DM me and I'm going to get you together. DM me your name and your number and the best time to call you. I need to know what time zone you in because I'm in the Eastern side. I don't know what time it is where you at. Give me your name and your number and the best time to call and the email address as well. So I can send you the appointment. So if you love helping people and you want to learn how to turn this knowledge into income, you can join my team. We're going to talk about how to get you trained, how to get you licensed to sell life insurance, to sell investment accounts, a license to help people open a will or a trust. You will be licensed to be able to do anything to do with the financial market. That's what we do. You can start your own business serving other people, because the mission not just to make money, but it's to multiply freedom. So let me leave you with this. Money without protection is stress. Protection without growth is stagnation. But when you combine both, you got peace. Your job is not just to secure the bag, but it's also to secure the future. You got to secure the security. So tonight, go look at your finances differently. Don't just chase income, because we don't chase money. That means it's running from you, right? We attract it. By me coming to your For You page, you attracted it. This is a sign for you to get that shit together. We build infrastructure. You don't got to figure this shit out alone. I'm just a DM away. You got to make it. Then you got to keep it. Then you got to pass it down. That's the mission. That's the movement. I'm going to see y'all at the top because the crowd at this bottom. See y'all at the top because the crowd at this bottom is crazy, Cedric. I'm going to see y'all at the top because the bottom is crowded. Said that shit all type of backwards. I know it's time for me to get off. When I start saying shit backwards like I'm speaking in dyslexia, it's time for me to get off. But yes, do y'all got any questions before I do get off? Y'all got any questions? I forgot it's hard for y'all. I forgot some of y'all can't ask questions because I got the live on, I guess, subscriber only mode. I apologize for that. It won't be that way. But if y'all do got any questions, feel free to inbox me and hit the follow button so you don't miss another live stream. And I was serious about helping you out with everything that I named tonight. Just give me your name and your number and the best time to call you, and I can get you on the schedule. If you're looking to work from home, I'm hiring. And it ain't just me hiring. It's the company that I'm contracted with, but I'm doing the recruiting, so I can get you on. I can get you on tonight at 1:25 a.m. in the morning if you're serious. You have to be able to pass a background check. Okay, you have to have a strong work ethic. I need high energy beings. I don't want no Eeyores. No people. I don't want none of the Eeyore acting ass people from Winnie the Pooh. Okay, I want the job. What do I gotta do? It's not a job. It's a business. So don't think that you about to come over here and act like it's a job. You can get paid a monthly salary in a week if you put in the work over here. So just inbox me and let me know. Also, think about what your financial independence number is. Think about how much money you need to retire. I want y'all to think about how much money you need to retire right now. Not in the future, because retirement is not about an age. Okay, y'all? Retirement is not an age. It is a number that you need. And if you don't build a plan to help you get there, you will never get there. So you want to inbox me so we can build that plan for you, because it's achievable. It's actually closer to you than you think. Right? $1 million is only $1,000 1,000 times. Compound interest will get you there quicker than you think. You have to get started, though. You can't build a snowman without the snowball. You need the snow, of course, but you can't build a snowman without getting started. You see what I'm saying? So right now, this live stream is Monday, November the 3rd, 1:26 a.m. We're going to make today twice as good as yesterday and half as good as tomorrow. I want y'all to stay vigilant out there this week. Pay attention, use them stop losses, and remember, a trade should only go in one or four ways: a big win, a small win, a break even, or a small loss. A big loss is never an option. I want y'all to enjoy the rest of y'all night, and also turn the fuck up this week. Be positive. Don't let nothing bring you down. Remember, in order for something to bring you down, it got to be able to reach you. Don't let it fucking reach you.